Welcome to Season 26 of ECCB Connects. ECCB Connects is a production of the Eastern Caribbean Central Bank, where we share with you who we are, what we do, and how we serve you. We kick things off by discussing credit reporting and credit bureau operations in the Eastern Caribbean Currency Union. Van Reynders, CEO of EveryData ECCU Limited, explains what credit reporting is, how it works, and how it ultimately makes borrowing and accessing credit easier for all of us in the ECCU. We share more with you after this break.
EC Polymer Notes.
Here's how you can detect genuine EC polymer notes. Feel. Polymer notes feel smoother than the material from which paper notes are made. Also, the front of each note has raised bumps at the top left-hand corner. These bumps form shapes that are familiar to you. Look for the clear window at the front and back of each note. This window allows you to see through the notes. If you hold the notes up to the light, you'll see the value of the note in an area of plain colored print. Tilt. A holographic foil is on the $100, $50, and $20. The images move and their colors change when you tilt the notes. Remember, detecting genuine EC polymer notes is as easy as 1, 2, 3. Feel, look, and tilt.
EC Polymer Notes. Cleaner, safer, stronger.
Van, thanks so much for joining us.
Thank you. Thanks for having me.
We're here to talk about credit reporting in the Eastern Caribbean Currency Union, what it is, what it means for the people of the region, and exactly how it works. It's a fairly new concept for some of us. It's never been officially done in the region. So to start the ball rolling, let's talk about what credit reporting actually is.
A credit bureau is an institution licensed by a central bank, such as the ECCB, to operate as a credit referencing agency, in the ECCU in this case, with a mandate to collect and protect credit-related information from a number of financial institutions, in this case being primary data providers, banks, credit unions, microfinance, and then with the purpose of consolidating that information into credit profiles, credit reports, with the primary function of making that information available to financial institutions so that at the time of lending, they can have a consolidated view of their borrowers to make informed decisions about lending criteria. So that's really what Credit Bureau is and what credit reporting is.
Let's discuss where the information actually comes from, because you said the mandate is to actually collect the information and then collate it to present to the financial partners. Where does the Credit Bureau actually get its information from?
The ECCB issued a Credit Reporting Act, Harmonized Credit Reporting Bill, that's enacted in all of the member states of the ECCU. That reporting act, Credit Reporting Act, mandates that primary data providers, being licensed financial institutions, banks, credit unions, microfinance, etc., are mandated by law to share credit-related information with the Credit Bureau. Right? So what the Credit Bureau does is that we collect this credit and credit-related information from this range of institutions, at least on a monthly basis, and then consolidate that into the Credit Bureau. And so that's really where we get our data from now. We are focusing primarily on banks, credit unions, microfinance, etc. in this first phase of the Bureau. After that, in phase 2, we are then moving to secondary data providers, which will be the hire purchasers, insurance companies, retail credit, those kind of, so those are the secondary data providers. So those will come in a later stage. But for right now, we are focusing on the primary data providers, and that's where we collect our data from, at least on a monthly basis from these institutions.
And as you said, you referenced microfinance agencies. Give us some examples, if you will, of those across the region.
Unicoma, for an example, Courts, Fast Cash, etc. Two divisions, of course, there's the hire purchase side of it, but yeah, on microfinance, these are the kind of, the payday lenders, etc. They make a very big part of the ecosystem of credit, really, where a lot of people borrow from the lower levels of microcredit as well. So we're not just focusing on banks and credit unions, we're actually going right down to the bottom. What we are doing as a credit bureau is we are reducing the barriers of access to credit, all right? And this is really where the power of the credit bureau is that financial institutions, when they want to lend to borrowers, don't have information on their borrowers. Who is my borrower? What is their exposure, or where else do they have credit? and what is their propensity to honor their obligations, or what's the likelihood of me getting my money back. And because of that lack of information, it's very difficult for lenders to give credit, right? And so there's high interest rates, there's high demand for collaterals, they reject loans because of a lack of information. And so what we're doing is we're collecting this information and making it available to lenders in real time at the time of application so that we can reduce these barriers of access of entry. Now, why we also focus on the very lower levels of credit is because the lower levels of socioeconomic borrowers can use that information to leverage themselves up in the hierarchy of access to credit. Because what will happen, for an example, is that we can build reputational collateral with a small microfinance where it's easy to get credit. But then through using the credit bureau, if I then walk into a more formal finance to get institution to get SME loan or vehicle financing, that institution can use your reputational collateral from the lower levels of credit and say, now we know who this person is. We can see the KYC, we can see that they're a good person, that they honor their obligations, and we can also see their full exposure so we can be certain that they can afford this loan. And that makes it easier for the financial institution to give the credit.
The Credit Bureau operates based on the Credit Reporting Act that was passed. And what pertains now is you go into a bank or an institution and you have to fill out a disclosure agreement. They communicate with other financial institutions to collect the information and then they gather it. What actually happens practically for the Credit Bureau to get the information from these credit information providers?
Essentially what the Credit Bureau does is that we sign subscriber agreements with each of the lenders. So under this umbrella of the Credit Reporting Act, we engage each of the credit providers in the ECCUs, in St. Kitts and etc., sign a subscriber agreement, and that allows this data sharing between us to happen, right? We then go through a process of data extraction from the institutions and loading that into the Credit Bureau. That happens in the background, at least on a monthly basis. So then once we have collected the information from each of the data providers in the region, we also give their authorized users access so that they can pull the credit report in real time. So there's a process of sharing data with the Bureau and then viewing data. Now, that viewing data happens as an authorized user and it happens in real time, so they can pull a credit report in real time. A point I want to make here, and it's very, very important to the listeners to understand, is that even though we are collecting their data, we protect that data at all costs. We're a data protection company, essentially. We collect this information and protect it from unauthorized access. It's very strict, the regulation around that. We get audited by the central bank. We have internal auditors as well as external auditors. So really what I want to emphasize here is that no one will have access to that information unauthorized without the written consent of the data subject. All right? So although we sit on this consolidated database, if an authorized user, such as a person at the bank, wishes to check my credit report, they have to get written consent from me as a consumer. So as a consumer, I'll go and do a loan application, and there will be a separate document that says, I give you consent to check my information from the Credit Bureau. And that consent is only valid for that specific credit transaction. So once you paid off that loan, that consent is revoked, right? And the consent doesn't carry over. So every time a bank wants to check or a credit union wants to check, essentially they would have to get our consent. And we audit that as well.
What I'm actually hearing is empowerment for the consumer.
Absolutely.
Because it gives you so much information to understand why or I wasn't granted credit or why I was given a particular loan. And then there are still corrective measures that you are able to take to put yourself in a better position when you apply in future.
And now for this week's financial tip.
Make a consistent allocation to an emergency fund. This will serve you as a buffer during financial hardship. It is recommended that you have an emergency fund of at least 3 times your monthly salary or income.
We're at the end of this episode of ECCB Connects, where we've been discussing the basics of credit reporting, what it is and how it works, with CEO of EveryData ECCU Limited, Van Reynders. Join us next week as we continue the discussion on credit reporting and look at the benefits to lenders and consumers like you.